Kitco Mining special coverage of the Precious Metals Summit is brought to you by New Core Gold.
The housing crisis hits the mining sector as geopolitics spur re-domiciles. Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 Precious Metals Summit in Beaver Creek, Colorado. Joining me today is Dan Vujcic, who is CEO of SolGold. Dan, welcome to Kitco.
Thank you, Paul.
Bit of a glib intro there, but a very poignant one as well, I think, because the company, you've delisted from the Toronto Stock Exchange and you've re-domiciled to Switzerland to get over the hump of presumably Canada's attitude to Chinese investment, specifically in copper projects. Tell me about that, why the company has taken this particular direction.
Look, I think that's a fair assessment. One caveat I want to put up front is that the domicile was in no way linked to Chinese investment or any of our shareholders. We saw an opportunity through the process of having a Swiss entity already as part of our initial royalty investment with Franco. We created a Swiss entity. The benefit to shareholders of having us domiciled in Switzerland is robust, and it was a good opportunity to re-domicile and take the opportunity to increase shareholder value over the life of mine by boosting after-tax profits by being domiciled in a jurisdiction that's favourable from a tax perspective.
How has that been received by shareholders, investors and the market in general?
I think it's been received well. I think there's an education process that we need to undertake as well as part of our discussions with investors. This conference has been very helpful. I think giving investors some numbers and comfort around what additional funds will flow through the project is quite important. The interaction between Ecuador and Switzerland has been tested through time, and there's a good relationship between the two jurisdictions as well from a tax perspective. So I think overall it's been received positive, and we now just continue to execute and simplify our corporate structure. We had a corporate structure that it was too busy and had too much going on, entities all over the place. So now we've got that discipline and rigor in our corporate structure, and it's going to make a big difference going forward from a financing perspective and from execution perspective.
Okay. A number of other companies are contemplating domiciling outside of Canada for various different reasons. One of the sticking points for some seems to be the sort of exit tax that Canada charges when a corporate seeks to leave. Was that an issue for you?
Not an issue for us. We were actually building up tax losses in our jurisdiction. Just to be clear, we weren't exiting Canada, we were exiting Australia. We've historically built tax losses. We're not a company that's in production, so there was no real tax impact on that in that regard. If anything, we had a number of tax losses that we were still using as part of our investment in the project. So from our perspective, that wasn't an issue that we had to go through.
Okay, well, let's talk about the project. Cascabel is in Ecuador. It's a monster deposit. Got 12.4 million tonnes of copper, 31.3 million ounces of gold, and 26.8 million ounces of silver. You've got a February 2024 pre-feasibility study looking at a 28-year mine life with average annual production of 123 tonnes per copper, 277,000 ounces of gold, and 794,000 ounces of silver, with a peak production of 216,000 tonnes per year of copper. Great stuff there. Recently in Ecuador, you obtained an amended investment protection agreement with the pro-mining presidency of Daniel Noboa. He's been recently elected for a 4-year term. That must bode well for the development path you're looking at taking with Cascabel.
Look, stability is a very important thing for us as a company. I think you've seen in numerous jurisdictions there have been issues in the past with mining projects. I think my comment on the overall AIPA, it's a good first step, covers us as a company for all the exploration that we've spent. This company has spent close to $500 million in exploration and drilling over its time. It's very rare for a project to have invested that much capital in a country just to find a deposit. So for us, that was an important first step. We're looking forward to the next step, which is getting the construction IPA. So that's basically the investment protection agreement that covers us for all the capex we're going to spend on the project. It's in excess of $4 billion of protection. And we think that should hopefully be something that we have in hand imminently. We've been having very good discussions with the government, and I agree with you. I think the government is very progressive and pro-mining. I think there has been some delay in terms of all the merging of various ministries and various things that are going on. But I think that once we have that in hand, that will be a fantastic catalyst for shareholders and give a lot of comfort that we have full protection for the project, which I think is really important.
Now, President Noboa has a 4-year term, so does that give you a very focused timeline to build or sell the project?
I think it's a very focused timeline for President Noboa. I think, it would be a fantastic legacy for his presidency to be able to get Cascabel in production in some form. I'm not suggesting that we will have a block cave in 4 years, absolutely not. But if we can execute this open pit strategy, if we can efficiently get permits, which I'm confident we will, then there is every chance that we will be producing within his term, and I think that'll be fantastic for his government.
Now, one of the things that the company's announced this year is the strategic shift to evaluate early production using, as you mentioned, open pit at TAM, which is Tandayama, and sub-level caving to accelerate cash flow generation. You've got a feasibility study underway by G Mining. They did all the engineering for Lundin Gold at Fruta del Norte. They're arguably one of the best firms in the world for doing this. What will the project look like, and when do you expect to get that feasibility study?
So the feasibility study is very important. We're not saying that we, by any stretch, discounting the importance of the feasibility study, but because of the strong economics of this project relative to a lot of other projects out there, we're very focused on understanding the open pit at Tandayama and hopefully having an open pit delineated in terms of economics. We're sort of finishing the drill program at the moment. We'll expand drilling a little bit over the next few weeks to further understand what that pit looks like and get that underway and hopefully have something for investors in terms of some economics around that. We'll also start an early works program, so we'll start developing the declines, the portal, etc. We have a lot of conviction around this project. We won't be waiting to complete the feasibility study to undertake those works because we're confident that we have something that is highly economic. And in the background, we will have G Mining as well, assisting us on finalising the feasibility study. And so in terms of the feasibility study, we're going to incorporate Tandayama open pit, so it'll take a bit of time to do that. So I envisage we'll have the feasibility study out next year. We're still debating with G Mining. We're having a very healthy debate on specific timing around that. I always want things far sooner, and that, they're very, very capable in that regard. So we're working hard in terms of just coming up with a plan that we think, importantly for shareholders, is financeable, is critical. I've financed a lot of mining projects over my career, and it is critical for any project finance banks and even for bond markets to see a steady stream of cash flow sooner rather than later, and be able to de-risk a major project. Block caves are not easy, so having an open pit that allows us to de-risk that risk that comes with commissioning a block cave and getting it up and running. So I feel pretty confident we have the right plan. Now it's just about execution and moving it forward.
Okay. Well, let's talk about financing. Your share price is up 64% over the past year and 170% since you joined as CEO. Market capitalisation now of 475 million British pounds. You were a banker. What are your thoughts on the project financing? If you could put the ideal package together, what would that look like?
Look, we're very fortunate. We have a head start having a quality counterparty like Franco and All Royalties with a facility on construction financing. I think they've been fantastic partners. You probably saw the recent announcement that we drew down another $33 million as part of our agreement with them to fund the feasibility work and some of the early work. So I feel good. I feel we have a good head start in terms of that facility. We're having a number of conversations, some at this conference actually, with various project finance banks and project finance providers. And I've also raised money in the New York bond markets for mining companies. So I think that's another alternative we would look at. Sequencing is very important, I think. We don't need to fully fund the project today. But over time, we need to start those discussions now to have that in place. So overall, I feel like this is probably the best market I've seen in a long time from a financing perspective. I know when we funded the CSA transaction in my previous life at Mac Copper, we used a number of levers to be able to fund $1 billion acquisition from Glencore with minimal equity up front So I think we can really benefit by having a tier one project, funding it in a market that has a lot of diverse funding sources. So I feel very confident about funding.
Do those funding sources include these international banks, the import-export banks? Because we've seen a lot of those expressing interest in financing copper projects.
Yeah, I've had a number of export banks already reach out to me, and we're having discussions. It's Ecuador, and thanks to Lundin Gold and others in country, now has a great reputation from a mining perspective, and it shows that you can be successful in the market. So a number of ECAs and Exim banks have expressed interest in the project. So I feel confident that, again, this is something that, as long as we start the process now and start those conversations and have that early engagement, that we will get that interest and continue that interest.
How important is it to minimise the dilution? Because over the years, the company's had to raise a lot of money. It's been a bit of a roller coaster ride for shareholders. There's been some raisings at relatively low prices and therefore a lot of dilution. Is there a real concern to minimise the dilution as you're looking to raise this quantum?
Well, look, we're always looking to minimise dilution. Shareholder value comes first for me. That's always been the pinnacle. I think, from our shareholder perspective, we've made great strides over the past few months in terms of getting real traction. We continue to try and get global institutions back on the register to show some progress and everything that we're doing. So by no means would we ever consider raising money where we feel like we are diluting our shareholders. I think there are times where we can leverage other markets and premium valuations in other markets and raise capital. But absolutely, at the forefront of our mind is shareholder value. So the sort of plan since I've taken over as CEO is to address the plan that is actually a financeable plan, so people can, for the first time in many years, start to think and believe that we can actually fund and develop this asset, because I actually think we absolutely can do that, and I've seen other companies do that. And we've got great shareholders and partners to also help facilitate that. So if the opportunity presents itself and we can do something and the share price is the right share price and we continue on the trajectory we're continuing on, I'll always be open to raising capital to strengthen the balance sheet. But yeah, absolutely, we would never do something that we would feel is dilutive for shareholders.
Okay. Your shareholder register includes Jiangxi Copper, BHP and Newmont, with Jiangxi being the most recent addition there. Is there some competitive tension there between them, or are some of the older investors, BHP, Newmont, perhaps looking for a liquidity event?
No, look, I think, the relationship with all three has been the best that it's been in years. I was fortunate to deal with all three, actually, in my previous life as a banker. I have dealt with them on numerous situations. I've spent a lot of time with all three discussing what we're doing and where we're going as a company. They've been incredibly supportive. JCC is one of the biggest copper off-takers in the world. They've done some great deals recently with First Quantum in terms of prepayment finance and various other forms of finance, which I think is great for us to have access to something like that as well from a shareholder. And BHP and Newmont have been great in that regard as well, very supportive and have shown no indication to me of any type of exit or being anything other than supportive. So as we stand today, I think this is probably the best in terms of relationship that we've had with all three, and they're very constructive partners. And I think for a company like SolGold, if you look at the mining landscape, we're very fortunate to have groups of that caliber on our register or as potential partners on this journey that we're going through.
Now, you alluded, Dan, that in the past that perhaps there's been a complicated relationship with some of those major shareholders. So I'm going to scratch that sore, if you'll allow me. Nick May, the former CEO, he's a polarizing figure, and he's arguably made SolGold's road more complicated than it needed to have been. What is his involvement in the company today?
Look, Nick is a director of the company. He's a non-executive director of the company. I think I've worked with a lot of founder companies. I've worked closely with Ivanhoe previously, with First Quantum, a number of founder-led companies. I think, Nick's been great from my perspective since I've taken over as CEO. He's been helpful when I've asked him for something and has by no means been involved in the business in any other way than as a director. So from my perspective, I try to move on from history and only focus on what's in front of me. And I've had that conversation with a number of shareholders that, frankly, I'm not really interested in what has happened historically. I totally understand that there are some sores, as you say, that need to be scratched, and there has been some problematic discussions in the past. But look, from my perspective, we're only focused on looking forward. And so far, from a board perspective and as a director, he's served his role on that front and nothing more.
So no longer looking to be bigger than BHP?
No, as you can see through our plan. And look, I think that's actually a very good point, Paul. I think if you look at the history of the company and you look at what some of the strategy has been historically, and you look at what we've managed to do in changing the plan, changing our approach and changing the strategy, that couldn't have been done without the support of the board and the shareholders and everyone else. So I think when you look at our plan and when you look at what we've done over the last 6 months, that should give you a pretty good lens on how supportive the board and the shareholders have been with regard to where we're heading as a company. So definitely.
Okay. Now, beyond Cascabel, SolGold has been a large landholder in Ecuador, the largest landholder for many, many years. You formed an exploration company to manage that. What are your plans for this, particularly in light of the recent government of Ecuador initiative to increase the fees or taxes related to exploration properties? What does that new tax mean for you, and what are you going to do to sort of manage that?
Absolutely. That's a good question. So I think from my perspective, if you look at the initial release that we put out when I started as CEO, we had flagged this up front. I think as a CEO, I've had the benefit of being on the board of SolGold for a couple of years. So I'd like to think I had a running start in terms of strategy formation. And I think from my perspective, we were always in need of streamlining the business. So relinquishing concessions and focusing really on the priority targets we have. We have a very clear view on where we see value in terms of the targets we have. We've had a lot of interest from major mining companies. We've conducted site visits at a lot of those concessions. So, I totally understand. I'm fortunate to have patient shareholders, but we are getting to the pointy end of those discussions with the various groups as to what ExploreCo ultimately not only looks like in terms of structure, but in terms of value. So I think from that perspective, I feel very comfortable, and I think we'll really downsize our concessions. And that wasn't driven by the changes in land fees from the government, which I think from a government perspective, I think the initiative makes a lot of sense, but it's probably just the wrong mechanism that was used. I think we probably could have gone down a very different path of having more of a discussion around what was being spent on concessions and what can be spent on concessions, and focusing companies on spending that capital, not on increased land fees, but on putting activity on the ground, because exploration is a fantastic driver for growth in any jurisdiction, particularly one that's pro-mining. So we're having those conversations with the government in terms of trying to get a meeting of the minds in terms of what our contribution to exploration looks like going forward. And I think we're having constructive discussions. I'm actually in Quito next week meeting with the Minister of Mines. So I think those discussions are going well.
Is your go-forward exploration company, will that just be a reduced number of concessions of the key projects, and the rest, are you going to hand those back to the government, or are you looking to sell those on to other explorers?
So another great question. I think in terms of the relinquishments, the process in Ecuador is pretty clear. We've started a process already on a number of concessions where we are handing them back. It's the cleanest way of doing it, frankly. In some of the other concessions that we probably don't see strategic value, especially in terms of location in country, we've been very open with the counterparties we've been talking to that we would potentially do a deal on those ahead of relinquishing them. So that is a potential path that we may explore. But I think the overall message is that we're trying to really create a cleaner and more understandable company and a better investment product for our shareholders. So we'll have a northern company, which will be Cascabel, and some surrounding concessions that add a lot of value to Cascabel in terms of a province, because we are quite fortunate that we are in a very good province in the north. And then in our southern concessions, we've done a fair bit of work on Porvenir and some of the other concessions. We've had a lot of interest in those concessions. and they're active conversations that we're having. And so from that perspective, I think the benefit of the southern concessions is there are a lot of comps in the region. You've got some successful mining assets down there in Fruta and Norte and Mirador. So I think having that as a separate company makes a lot of sense. So we will ultimately, over the next couple of months, decide on the exact structure for that company, whether we list it separately, whether we JV it, what we do with that. But we're pretty confident that splitting the companies in two will allow us to enhance focus on Cascabel, and then also for the first time extract a lot of value from our exploration concessions, because historically the company's received zero recognition in terms of value for those concessions. So monetizing or getting some interest in those is crucial for our overall value.
Okay. I think when this tax was announced, it came out of the blue, and a lot of the companies active in Ecuador were really surprised. They weren't expecting this, and obviously investors, people outside Ecuador, even less so. How did we get here? The last time Ecuador was awarding concessions was 7 or 8 years ago. They were using a Swiss auction system where companies bid what they would spend on the projects. And I think it'd be fair to say some companies bid way, way more than they ever could spend. And that investment obviously didn't materialize. So is this tax a government attempt to, let me phrase it this way, coerce companies to drop concessions via de facto expropriation, or is it just a misguided, misinformed policy?
Look, I'd like to think it's the latter. I think the government has been very pro-mining. I think every other discussion that we've had with the government has been incredibly positive. I think this was an idea that was formed and probably would have been formed much better through consultation with the mining companies first. I think everyone in country was surprised by this. It doesn't mean that we can't have consultation now and have active dialogue with the government now, which is what all mining companies are doing. I speak to a lot of the CEOs in country, and we're all having active dialogue with the government to try and educate a little bit in terms of policy and trying to give them a better understanding as to where the real value is. I do think there was a frustration, and this is not an Ecuador-specific issue. This happens in every mining jurisdiction. I think there was some frustration around the lack of progress on certain concessions. Some of those issues were affected by the government itself previous governments not handing out permits or restricting ability to do work on concessions. But I think even parking that to one side, I think the intention isn't necessarily a bad intention. I think it's very logical and very normal, especially with the cadastre opening up next year, trying to reset the whole landscape in terms of exploration in country. I think that was the intent was there. It was a good intention, but it was just the wrong policy for the investment community. And I think that's where a lot of investors and companies and everyone was scratching their heads as to why we can't come up with a better policy. So I assume that will change over time. And as I said, we're having those conversations actively with the government.
Okay. Well, we've covered a lot of ground in our conversation, Dan. And so to wrap up, maybe we can just focus on what are the key catalysts, naming what the key catalysts are for the company that people can watch out for over the next 12 months or so. Yeah,
absolutely. So I think critical is understanding whether we have an open pit at Tandayama. I'm very confident that we will. The recent drill results that we've seen, and we continue to get assays, and it shows that there's real potential there. All the sort of grades exceed what our initial modelling had. So really defining that is a critical catalyst for investors and for us as a company. Getting the CEPA from the government in terms of that investment protection agreement to allow us to confidently spend significant capex on the project going forward and give our counterparties comfort that we're protected is very, very important. Getting a solution on the southern concessions, or Explorco, if you like, is going to be critical as well as a catalyst, and quite an important catalyst. And initiating the early works, I think, is very important. We talked about the feasibility study earlier. The feasibility study is critical, but because we have conviction over this project, getting G Mining mobilised to start on the portal and surface works, which we envisage could be as soon as a month or two away, would be a significant catalyst for shareholders. And I think the other catalyst is me spending time doing interviews like this with you and others in the industry to keep emphasising the disconnect that we see in terms of our valuation. That's something that I think has been a priority for me. I understand that a lot of the elements we've discussed today probably attack that. But I do think that because of the sort of history here and some of the sort of misunderstanding, getting a bit better optics in the market and a bit of an education process on the quality of asset that we actually have is critical to bridge that gap, because I do still think that we're very undervalued relative to peers, and that, you know, this is a project that a lot of investors, particularly global institutions, should be embracing due to its strategic value.
Well, you've got a lot of catalysts coming up, so we'll certainly have to circle around and do another one of these at some point in
No pressure.
the near future. It's been a wonderful conversation. Dan Vujcic, thank you very much for joining us today.
Thank you very much, Paul. It's been a great.
And we have a lot more to come from the 2025 Precious Metals Summit here in Beaver Creek, so stay tuned and hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by New Core Gold.